Cool. We are having the another speaker of the day. His name is Erkan. He is the digital channel at the Fibabanka, and he is talking about the approaches to the open finance in the. Hey,
Okay.
Erkan.
Hi, Shara. Uh,
Yeah. Thank you.
Thank you
Thank you
very
for.
much.
Yeah.
Okay, I'm
Thank
going
you and
ahead.
welcome.
First of all, actually, thank you for having me here. Um, Hello, everyone. My name is Erkan Dervis. I want to give a short brief about my career before the presentation. I am the director of digital channels at Fibabanka, responsible for internet and mobile banking, CRM technologies, call center platforms, and the digital security. Before Fibabank, I worked for Ziraat Bank, İşbank, and some well-known technology companies departments, also digital channels more than 16 years. Today I'm going to talk about open banking approach to finance, and and then I'm going to share the main points of what is open banking, what is banking as a service, and what is platform banking. Next, I'm going to talk about the timeline of it and the position of Turkey. And finally, I'm going to share my notes and thoughts on approach to open finance. Let's get started. As you know, Bill Gates in 1994 he said that banking is necessary, banks are not. Many people did not understand this at time, I think. Nowadays, going to the bank for banking transactions has become an almost exceptional situation for many people. Nowadays, the customer wants instant access and being fast. Customers are now waiting for a problem to be resolved without having to call the bank, even if they are experiencing a problem. A frictionless customer experience is related to customer how frequently need to go branch or call center. Obviously, there has been a very rapid transformation during this pandemic process. We suddenly found ourselves in a technology based lifestyle in the middle of the pandemic. We have faced a period in which customers' behaviors have also changed, meaning the customer behaviors supported the shift of life to digitalization. To meet our needs without leaving home, due to the pandemic, deserted prison people attained, of course, new behavior patterns. Sometimes customers may want to access banking services via the phone they use or their favorite loyalty application or coffee shop application instead of banking channels. For example, where the customer works with more than one bank, she may also want to manage her consolidated accounts from a single application offered by a bank or a third party. In fact, the open banking approach, which takes internet banking and the mobile banking further and allows to the customers to view and transact financial data from more than one bank or a financial institution on a single screen at the same time. That was already agenda of financial regulators in many countries in recent years. But of course, COVID-19 has shown that it deserves more than just a hot topic. So now let me talk about what is open banking. The open banking is similar to banking as a service, because it also leases banking services to non-bank organizations. However, two models are made for different purpose, actually. While banking as a service allows third parties to offer pure banking products via their interface. Open banking grants access to clients' data with their consent, of course, without transferring banking functions. Open banking is a part of the open innovation model. It comes along with the growth of technology and changing attitudes towards the ownership of user data. With the release of PSD2, banking data is now available through public API, which kickstarts the rise of new fintech initiatives, gainful for service providers, developers, or and users, let's say. Banks have to share their customers' data and the services with trusted their third parties with the approval of customers. The way for banks to open their services to outside world is through the API technology. With the system where the customer's data will be the owner, an environment will be created in which fintechs will develop and diversify in addition to change that incumbent banks will experience. What is banking as a service? Banking as a service is innovative B2B service allowing banks to lease their infrastructure. Banking as a service, clients are big holdings, retailers, fintech startups, and any other organizations that wish to carry out finance operations, but do not want to organize their own bank or do not want to build their own bank. The banking as a service model is similar to renting cloud resources from third-party providers like Amazon Web Services or Google Cloud. The renter, let's say, themselves choose what tools to use. Using these instruments, the BaaS user can perform standard banking operations in their app. For example, they can implement balance checks, online payments, history views without any interaction directly with the bank. Let me tell about some use cases of banking as a services. For example, neobanks show a good example of banking as a service in action. In most cases, they are not stand-alone organizations, but add-ins in top of traditional banks. Neobanks use the major banks' infrastructure to provide an upgraded finance experience. Neobanks do not usually issue big loans or participate in a large financial operations. Instead, they succeed in their areas like short-term loans, quick deposits, and partnership with well-known retailers. The above, of course, does not mean banking as a service is only suitable for those who want to create their custom bank. This model allows any business to run banking operations through its interface. For example, if you have a restaurant or a retail shop, you might offer branded debit cards and reward users for using them. You can also spending behavior and use this data to improve your marketing strategy. Another idea is to give an online loan for the purchase of your goods and services this would help you raise customer loyalty and build brand confidence. Another approach is platform banking. Platform banking is quite the opposite of banking as a service and open banking. Unlike previous models, the bank doesn't share its infrastructure, but it integrates other firms' services in its own app. What does it mean? Let me clarify it. First of all, to compete with more progressive and agile companies, the traditional bank model is, as you know, rather outdated now. It is inferior to advanced fintech services in terms of innovation and a variety of in-app perks. In this situation, big banks risk losing customers. That's why they are investing in technology and adopting external tools to enhance UX. Today, there are many examples of platform banking. You will probably see a few if you open banking app installed on your smartphone now. It's very convenient to have such services in mobile banking app because they allow users to perform all daily transactions in one place without to need to go to third-party sites or apps. If you need a fresher idea about platform banking, take a look at the robo-advisor sites. Having them in a place enables users to invest in projects without leaving the app. While performing services from other applications via a debit card account or a credit loan, just think, why not without leaving the banking application? That is exactly what the trending platform banking concept is for. You can purchase textile, a household appliance, every kind of electronics, flight tickets, movie tickets, and etc. Without leaving your mobile application. If you think that, isn't it nice to think that you have performed all these operations in your banking application? For example, when a user who wants to buy a house uses a loan from the bank, he or she will be also to buy furniture of the house on the same digital platform. Actually, I can give a example. Fibabank in Turkey recently cooperated with Turkey's largest digital and physical technology shopping company in the Fibabank mobile application. Within the Fibabank mobile application, customer can now purchase electronic devices such as notebooks, monitors, tablets, desktops by using loan with just a few clicks. It's very convenient solution for the customers, of course, and Fibabank approximately change their application to a super app approach. If we talk about the timeline, let's say, as you see in October 2015, the European Parliament updated the set of rules known as PSD, which stands for Payment Service Directive, and published the PSD2 rules. In August 2016, the UK Competition and the Market Authority (CMA) has made a decision concerning the 9 largest UK banks. With this decision, third-party companies registered in open banking system became able to directly access data up to the level of account transactions. It is said that open banking, which started in England to spread to the world of the Europe, with will be a revolution for the financial sector. Proposes innovative was to pave the way for the development of online mobile banking. Um, Actually, we can divide the countries into three sections by concerning their approach to finance, how they behavior. For example, there are three categories we can say: pioneers, followers, and the conservative. In the pioneer class, countries such as Sweden, England, Netherlands, and USA and Singapore are included. These are countries that have both a high degree of readiness and the potential to drive the open banking forward. Brazil, India, Italy, and South Africa can be called conservative countries, both because of less potential and less preparedness. In the middle, there are follower countries such as Australia, Belgium, France, Germany, and Spain. Of course, approach the open finance, the most five important banking services are checking and saving accounts, loan and mortgage services, wealth management, providing maybe credit and debit cards, overdraft services, like that. How about the Turkey position? Open finance is a concept that has been on agenda in Turkey since 2013. With the regulation introduced, the legal infrastructure has been completed, and the final version of the law has finalized as January 1, 2020. Open banking services in Turkey are regulated and supervised by the Central Bank of the Republic of Turkey. By the law, providers that offer open banking and the payment services must obtain the authorization from the central bank. Turkey is one of the first countries to implement the PSD2 directive outside the European countries. As of December 2019, 2021, December of 29, I mean, the regulations regarding the service banking model were announced in the official newspaper, and the way for them to provide services in the banking service banking model was opened. The service banking will only be able to provide service model banking services to domestic interface providers, and only within the framework of its own operating permits. Banks will not be interface providers. Actually, back to the general subjects, I want to share my notes and thoughts about this approach. Of course, if there is a gap between the technology and the customers, you may miss the customers. For this reason, you should appeal to the customers with the right solution and the technology at the right time. What I mean is discover your strengths and weakness, be aware your weakness, and develop your strengths more differentiate. As we know, SWOT consists of these things. Be aware your weakness and develop your strengths. They always told us this way. However, about weakness, We also need to collaborate and cooperate with fintech or technology companies to make up for the challenge of our weakness. Not only be aware is enough, actually. And as a result, a win-win situation will occur between the banks and the technology or fintech companies. Of course, in addition, the cybersecurity investment is required by open banking and remote access to have become very vital. What are the macro objectives of open banking? We can say that developing a financial products and services, increasing transparency and competition and in the financial sector, facilitating the financial life, increasing the financial inclusion, and of course improving the customer experience. Of course, when you look at it, this technology has three stakeholders: customer, banks, and fintechs. We should also mention the advantage from the perspective of these three stakeholders. By using open finance feature, what the customer gains, let's talk about it. Decrease in product and the service cost with increasing, of course, competition and innovation by banks. Speed, convenience, and accessibility, of course, improves. Alternative products, more options, opportunity to compare. The customer can opportunity to compare the products, of course, if there are more alternative products available. Better quality and a fair service and personalized products. Of course, unlimited accessibility to products and services, lack of strict rules. Well, so how about the bank's point of view? To gain customers without using too much of their own resources, and they can provide the depth to the services used by customers, and they can offer a new generation products and services to customers in a shorter time. That I mentioned, SWOT case, give a chance to fintechs to win-win position can occur. Increase the transaction volume and the product usage volume is available. Of course, it's by the points of view from the bank, and of course reduce the operational burdens in corporate integrations and gain through API economy. Of course, we should not forget the gains of the fintechs benefiting from the infrastructure, know-how, and the customer portfolio of the banks. Is very important to respond quickly to changing customer expectations by developing new generation product and services to make customers' lives easier with innovative approaches. To deliver technologies and the solutions to wider audience and earn profits. Well, actually, my last verse. Although open banking has entered our lives with the field of payment services, its current position is far beyond this. It would not be wrong to say open banking is now a concept that shapes the future of the open banking ecosystem rather than being a necessity or a strategy. Innovative and the collaborative banks are already investing heavily in the concept of open banking, which benefits the entire ecosystem due to the possibility of bringing the non-bank segment into the system and increasing service quality. I think I am little over the time, so I am sorry. Thank you for listening to me. I hope I met your expectations.
Hey Erkan, it was really nice topic and detailing on how open banking and finance work. So
Yes,
yeah, thank you very much for joining us.
thank you very much.